Until now we have only spoken about daily pivot point levels, but weekly and monthly pivot point analysis is also reliable and thus popular. Swing traders are the ones mainly using pivot points based on weekly data, while position traders favor the monthly variety. They are derived from the same formula as the daily pivot points but use the previous week or month's high, low and close. So here are the formulae. Pivot point for current week, PP, equals, high, previous week, plus low, previous week, plus close, previous week. 3. Resistance 1, R1, equals 2x pivot point, low, previous week. Support 1, S1, equals 2x pivot point, high, previous week. Resistance 2, R2, equals pivot point plus, high previous week, low previous week. Support 2, S2, equals pivot point, high previous week, low previous week. Resistance 3, R3, equals high previous week, plus 2x, pivot point, low previous week. Support 3, S3, equals low previous week, 2x, high previous week, pivot point. Monthly calculation. Logically, the calculation for the monthly pivot points looks like this. Pivot point for current month, PP, equals, high, previous month, plus low, previous month, plus close, previous month. 3. Resistance 1, R1, equals 2x pivot point, low, previous month. Support 1, S1, equals 2x pivot point, high, previous month. Resistance 2, R2, equals pivot point plus, high previous month, low previous month. Support 2, S2, equals pivot point, high previous month, low previous month. Resistance 3, R3, equals high previous month, plus 2x, pivot point, low previous month. Support 3, S3, equals low previous month, 2x, high previous month, pivot point. The mid-pivot points are calculated analogically as well. Although different types of traders use a variety of pivot points, periods, day, swing and position traders, an overlap between them renders a certain price level much more sturdy and hard to be broken. Thus, if a daily pivot point coincides with a weekly one, it will stand a higher chance of successfully pushing the price back in its original direction upon contact. The daily, weekly, monthly high-low pivot points indicator is the most sophisticated price level analysis tool developed for MetaTrader 4 platforms. It is the best alternative to automatic support/resistance indicators for identifying key event areas on price charts. Technically, the pivot point itself is a support and resistance indicator. It calculates a price average based on intraday high, low, and closing prices over different timeframes. Professional traders consider daily, weekly, and monthly pivots as strong support/resistance levels, as it is evident that the price is often used to reverse from these areas. The price level analysis is an undeniable part of technical trading, especially in Forex and stocks. The indicator make it easier for you to identify the possible upcoming price swing levels and anticipate the trend direction as well. For instance, the price fails to break above the immediate intraday pivot resistance may indicate the price is still under a bearish trend condition. In this guide, you'll learn how to use the monthly pivot points in MT4 for identifying the potential buy/sell zones in Forex, stocks, commodities, and cryptos. In the first pattern, 1, the price plots a bearish pin bar and a large bearish candle consecutively, indicating the price rejects the daily pivot and intends to remain bearish. As you can see, the price later chose to move downwards following the formation of the bearish reversal pattern. The second pattern, 2, shows a series of solid bullish pin bars rejecting the immediate pivot support. This bullish reversal pattern indicates the price is likely to initiate an uptrend move from the current support zone. The third example, 3, shows a continuation pattern of the current market trend. The price entered a